and welcome back guys to the channel. And on this video guys, I'll be teaching you a simple basic liquidity trap that smart money likes to put into the market to induce dumb traders to thinking that it's actually a sell when it's just actually a sell to buy, or actually a buy when it's just a buy to sell. Now let's get into it, right? So basically what happens at most, right, you'd find something like this, right? You'd have a move up, a move down, a move up, a break of structure, right? And then a pullback into some area, right? And then you'd have something like this, and then something like this, and then this, right? So this is the actual setup that I want to teach you guys for today, right? So boom, like that. So firstly, we had a trend going bullish up until this area here, when we had this break to the downside, to indicate that this is a change of character, right, from bullish to bearish. Now with this change right here, we now know that price from here wants to go bearish, targeting what, this low right here as our next liquidity run, right? Targeting this low here as our next liquidity run. And from there we now know that price has to retrace into some area of supply or a bearish order block, and from there price could now gain that momentum to go lower and take out the lows. So the next thing that we do is look for that area, right? Lo and behold, this right here is that area of supply. Now price normally would come up and then create a high, right? And then from here leave you like with a tiny little bit of confirmation, right? Leaving like a wick to induce, or like a candlestick like a hanging man or a doji or something, right? To induce dumb traders to thinking that, okay, so the market is now selling, right? So they would sell it, very hard, sell it, right? And while selling it, they'll place all their stop loss above the wick, right? And then price would normally come down, right? Fail to break this low, go up very rapidly, right? Take these all stop losses out, right? Because these stop losses at the moment, they're just acting as buy side liquidity, right? Taking out all this buy side liquidity and then mitigating the actual area of supply or that bearish order block, and from there now giving us that confirmation to go bearish from, and actually coming to run through the lows. So this is the type of schematic that I want to teach today, right? Now let's go into the actual charts and see how does this work. Yeah, so boom, there. Now taking into consideration this area here, right? So this is like the UJ on the 15-minute time frame. So by taking out this area, right, as you can see previously, right, we had this bullish trend, right? Price making new highs up until this area here, where price comes down and breaks this low right here. So this is that change of character that we were talking about. So from this change of character, we need to identify what, that last place where smart money bought before they sold, right? This area right here, the buy to sell. Now our last buy to sell is pretty much this area right here, right? This area here, because price makes this high here, sells, then buys, and then sells even harder. So that's our last buy to sell. Now let's highlight it in some instance like this, right? So price comes and then mitigates that. Now after that mitigation, we now have our area here where what, now price wants to well, price has now mitigated, right? And from here we now know that price needs to run bearish from this area here. Now look at what price does. So from here price now comes down, right? Price comes down, creates this low, right? Comes up, goes down once again, right? And creates this overall low. Okay, so price has now created this as an overall low. Now we need to see price come back up, right? Mitigate this area, this last area of buy to sell, for the sells to be effective and efficient, right? So let's see what happens, right? Because this is the last place, as you can see this candle here, right? They bought very hard and then they sold even harder. So that's how last buy to sell. Now from here, price makes this low, comes up, and then makes this high. Now this high has not yet mitigated this area here, because what, this area is the last place that smart money bought very hard, which means what, they still have their bullish orders in here running at very big negative losses, right? Now they cannot allow this price action to go far into bearishness while they still have bullish orders in here. So they need to pull this market back into this area to mitigate this area, as well as close those positions, right? Close all those bullish orders that are lying in here at break even. And once those orders are done being filled, they can now trigger their own bearish positions from this area here. And those bearish positions are the ones that are the ones which are going to give momentum to this price to go overall bearish, right? And break out those higher time frame lows. So all we need to see is price pulling back into this area, and so far we've not seen that, right? We've just seen price creating this high, which is just in the middle of nowhere, right? And then price from here comes now down and fails to break this low, right? As you can see, this low is not broken. So which means what, this is a weak low, right? Because a strong high, sorry, is a weak high, because a strong high needs to break a low. So until this low is broken right here, this is not a strong high, right? This is a weak high, which acts as well as buy side liquidity. So price now begins to range and build up this liquidity right here, right? As you can see, this liquidity right here. Now price, so it's building up buy side liquidity here and sell side liquidity here. So price decides to take out the sell side liquidity and then comes up and takes out this buy side liquidity. So now that all the liquidities have been taken and price has now entered into our what, our last place of the buy to sell, or that supply area, or the bearish order block, right? So from here now, we're now satisfied, right? Everything is already been done. So all we need to look for now is that confirmation to go bearish. So price from here now comes down, creates this low, comes up, fails to break this high because of what, weak bullish momentum, and price breaks lower, right? So with this break, we just need to see price coming back up, mitigating this area, which is what's done right there. And then from here now, price breaks off and continues breaking off, as you can see, up until the take profit area, right, which is right there. So I hope this video was very informative on these liquidity traps built by smart money. And of course guys, if you did like the video, then don't forget to hit that like, subscribe if you haven't, turn that bell button on for notifications. And until the next one guys, stay safe, have a nice trading week, and peace out.